Hello, my name is Courtney and I'm with SAC. And today we are going to be having the presentation. So, thank you all for joining us for our very first Shit You Should Know series. Today we have a representative over from the Office of Student Money Management just to talk about why banking is important. So, now I'm going to hand it over to Shu.
Hey guys, how are you? So my name is Shub and I'm from the Office of Student Money Management and I'm one of the peer financial coaches. And what we do is we try to help students help how to manage their money because that's a skill that in these days are very important, but unfortunately it's not really taught. So we have a presentation today. Let me share the screen. So um, Yeah, like I said, the presentation today is for financial wellness and banking for college students. And I'm hoping that this will help you guys to learn something. So today's topic, first we're gonna go through OSMM, what our office is for, and what do we do. Then we're gonna go a little bit over budgeting versus financial plan. And then we're gonna talk about the more important stuff, which is banking and the types of account that there are available. After that, a little bit about managing student loan debt, because that's a big problem these days. A little bit scholarship tips, and finishing it up with some secrets to success. So our office has confidential peer financial coaching, and that is completely for free. Any services that we have in our office is free. So that's a good thing. And we help you guys create monthly spending plans because budgeting is a very important issue in today's world. And we also help you guys create college financial plan because if you guys don't know how you will pay for your college in the next 4 years or 5 years, that might create a problem down the line. And we help you guys find additional financial resources such as scholarships and maybe some grants and funds that the WSU provides, which might not be known with other students. And the one of the biggest thing that we do is we help you file your taxes, and that is for free. And that is for both international and domestic students. And usually this is the time where we send emails to students telling them, hey, if you guys need help, we'll be happy to help you. Just do an appointment with us. And that's what we do. So first, budgeting versus financial plan. So budgets and financial plan can help you financially be successful in the future and in the present day. Let's go. So budget. What is budget? Budget focuses on immediate money issues and how you plan to spend your earnings. So the paycheck that you get, how you're going to spend it. That's what comes under budget. And it evaluates how much you make, measures how much you spend, and helps you spend less essentially so that you can have some savings. And it's usually short term. So budget you would make for, let's say, a month, 2 months, maybe 6 months. So that's what a budget is. Now, the next is financial planning. Financial planning is for entire life finance goals, and it's a guide that can help you be on track for reaching your goals. Maybe your goal is to be self sufficient and stop working in 5 years. For that, you need a financial plan. And the one thing that we always say is always ask, what do I want to be? Like, do you need to change your current lifestyle to achieve your dreams? Or whatever you are doing right now is perfectly fine. And like I said, financial plan, it's usually a long term, so maybe a year, 2 years, 5 years, that's what it is. So, types of expenses. There are primarily three types of expenses that would be fixed expenses, variable expenses, and periodic expenses. So fixed expenses is something that, for example, it's rent or loan or insurance. That's like, you know how much it is and you know it's every month usually, and it's consistent. So if you're staying in an apartment or if you're staying in a dorm, you have to pay for your rent, car, gas money. That's usually. Now, gas money, it could be in the variable expenses, which is monthly usually, but it's not consistent. So it depends on how much you're spending that month. So cleaning supplies, groceries, food that you buy from outside. That's what comes in variable expenses because it's monthly, but it's not fixed. The last type of expense is periodic. Now, these are usually a bigger chunk of amount that you have because it's something like, let's say, your tuition money that you have to pay to the university, or something like travels, or something which I hope that doesn't happen is a doctor's office visit because doctor's office is expensive in the US and you want to make sure that you have a set amount of savings aside so that you can cover those issues. The next topic we're going to go is bankings and accounts. Now, it is very important to know the difference in the types of banking facilities that are available to a college student and also the types of account that you can have. Now, starting with types of banking, usually there's two. The first is called traditional banking. Now, traditional banking is usually nationally present, so you will have it in pretty much every big cities, every state, and it has an extensive network. Usually these are for-profit institutions. For example, Bank of America, Chase Bank, Wells Fargo. These are the examples of banks that are traditional banks. So usually they have good technological development so that, for example, you guys can have a mobile banking app which you can pay phone bills, electricity bills, and you can also pay to other people directly from your phone. So that's a good thing that usually big banks have set up. And typically you don't need a membership requirement. So you can just go and open a bank account without much hassle. And customer service is usually more consistent because they go through standard trainings. So it doesn't matter usually in which state or which city you're going to. For example, Bank of America, you'll probably get the same amount of customer service. Now, one bad thing about those traditional banks are they have a higher transaction fees and sometimes also higher interest rates for loans and other money that you borrow, and credit card fees usually. So that's the first one. Second one, credit unions. Now, credit unions are usually localized or not as extensive network as the national banks. So some of the examples might be the campus credit union that we have on campus and also the Meritrust Credit Union. Now, these are usually non-profit institutions that are smaller in size, and a lot of times they need a membership qualification. Now, a membership could be as simple as being a college student or something like you have to be a military veteran, let's say. But it usually varies and it's not that hard to open a bank account in a credit union. Now, there is usually the case is that they have better customer service because it's smaller and more personal, and also because these are nonprofits, so they do not have an incentive to like take money from you, so to speak. And they usually have good interest rates when it comes to borrowing money or credit card loans. And also they have lower transaction fees. Now, a little negative of credit unions is sometimes they might lag a little behind when it comes to technology. So some of the credit unions, you might not have a good phone banking app, mobile banking app, or if you do have, it might not be as extensive as a full blown like Chase mobile banking app. So that's one of the downside that you get, but usually it's a good deal. Now the question arises, why do you want to have a bank account? Now the reason you want to have a bank account is number one, it can keep your money safe and help you manage your money. Because if you're doing only cash, it can get stolen, it can get destroyed, or it can just go out of circulation for some reason. Maybe you just keep it and then a rat chew it off, you know. It's funny, but sometimes that might happen. Another good thing is you don't need to carry large amount of cash for daily needs. So if you have to pay, let's say, your university fee, you don't have to carry around $1,000 or $1,500. You can just pay by a card, a debit card, which you need a bank account for that. So that's one of the reasons that you want to have a bank account. And You can use it everywhere: gas, food, online buying, retail purchases, everything. And it's usually also cheaper than using money orders because a lot of times for money orders or check cashing companies, they either charge you a percentage of amount or they just charge you a block amount to use the money order or check cashing companies, which it's essentially you paying them to get your money. So you never want to have that. And also, like I said, it's easier to get your paycheck directly to your bank account rather than getting a check and then cashing it out. So that's a good thing. And that's why you should have a bank account generally. Now, there are also two different types of bank account in both the credit unions and the bigger banks. The first is savings account. Now, as the name suggests, savings account is usually designed to save for long-term goals and financial plans. Now, unfortunate thing is most Americans do not have much savings. So, and typically for a college student, you won't have that much savings that you can like open a savings account. But if you do have, this is a very good way to keep your money. Now, one of the bad thing about savings account is they have limited access, which means usually you can have only about 6 transactions per month taking your money out of the savings account because the whole premise of it is you're keeping it there to keep your money safe. So if you do regular transactions, it's usually better to have a checking account, which we'll talk about a little later. Now, the good thing about savings account, it offers a higher interest rate, if any, because like we will talk a little later, checkings accounts do not have many times interest. So if you have $1,000, a checking account might have 0% interest rate. What that means is you're not going to earn any money for storing your money there. But with savings, usually you can have an interest rate that it's like you get paid to keep your money. And it usually needs to be connected to a checking account to pay for bills because of the transaction limit that they have. And another bad thing about savings account is they make you store a minimum account balance that if you go under, you might have to pay a fine because they expect you to keep that amount. Usually that runs anywhere between 500 to 1,000, 1,500, depending on what kind of bank you have. And they also have a monthly maintenance fee. So usually the wisdom says that if you have a lot of money that you don't want to spend, that's when you keep it in the savings account when you make one. But for other purposes, you usually do what's called a checking account. Now, checking account by design, it's used for easy access to your funds. So the paycheck that you get every 2 weeks or every month, that's where you put the money in the checking account and you just withdraw it. Now, with checking accounts, you get a debit card usually, and you can access your funds from an ATM or directly pay to any merchant or online store. Now, typically, like I said, it doesn't have any interest rates in it, so you won't earn any money off of it, but the benefit is you get easy access. And they also don't have usually a monthly fee. Now, the perk that it comes with is it usually you can order checks free of cost. So if you have to pay someone through check, which sometimes might happen even today, you don't have to pay for the check because you already have a checking account. You just go to the bank or the credit union and you ask them to make a check and they'll deduct that money off of your checking account. Now, why should everyone have a checking account? So the conventional wisdom says that if you want to have a bank account, the first one that you should definitely get is a checking account. Now, the reason is it overlaps a lot with why you have to have a bank account in general, is that it helps keep your funds and helps manage it easily because if you have cash, sometimes you might not know how much money you have. And also, it keeps your money safe, usually because they have insurance policies that covers your money if the bank fails. Paying bills is very convenient. Like these days, you can just click online, pay your electricity bill, pay your Wi-Fi bill. You don't have to go to the office or anything. No transaction limits. So with checking account, you can do as many transactions as you want. No limit, no questions. Just make sure you have the money because sometimes there is a thing called overdraft fees that might apply. Ease of access through online banking, like I said. And getting paid is super easy. Your employee will just direct deposit your money to your checking account, so you get your money instantly. And using checks or debit card leaves a paper trail. Now, this is very important because if you have a transaction, for example, if you paid someone to do something, or if you paid, uh, let's say, to the university or to someone, you have a paper trail because in your account statement, it shows you that you paid that money. You can always use that as a proof and also as an arbitration that, hey, look, I paid this money. Because with cash, there's no paper trail. The other person could just say that, hey, you never paid me. And there's usually not much you can do to prove otherwise. So now that we talked about a little bit about money and bank account, let's switch the gear a little bit towards managing student loan debt. Now, this should be a very short one. Now, there are different types of loans that you can probably get for your education. First is student loans. So that's what the federal FAFSA, everyone usually has heard about it. You have to fill it out every year. And it's usually less expensive with lower interest rate. And sometimes they don't even charge you interest until you graduate. So the three different types are usually Perkins, subsidized, and unsubsidized. The Perkins loan is low interest loan for exceptional financial needs. So if you come for a very uh, poor background, let's say, so that's when you use the Perkins loan, like financially, if your family cannot support you, if you cannot pay it, then you might use a Perkins loan. Now, one of the good ones is the subsidized loan because it does not charge you interest while you are in school. So as long as you are a full-time student, and if you have a subsidized loan under FAFSA, they will not charge you interest. So the only money is the principal amount that you took. That's good because the money is not increasing that you have to pay. Because usually for unsubsidized loan, let's say, if the interest starts as soon as you receive the loan, what end up happening is, let's say you took a $10,000 loan. In a year or two, that might go 11 or 12,000 because they charge interest and now you have to pay back 12,000. So it's usually a good idea to get a subsidized loan. The other kinds of loans are parents' loans. So it's called the Direct Plus, where you as a student is not taking out the loan. It's your parents who are responsible for the amount to pay back. Now, this is a little bit risky because if for some reason you cannot pay back the loan, your parents must. So sometimes if your parents are not comfortable with that idea, you cannot get that loan. And it's also a little bit riskier. The third one is the private loan, which is the one that we tell students usually not to take unless it's absolutely necessary because it usually has a way higher interest rates and it should always be your last option. And some of the ways you can get a private loan is credit card loan, maybe home equity loan, or maybe a private education loan from a financial institution. Now, again, like I said, usually we tell students not to take that because it's usually hard to pay back and it has a lot of interest that adds up very quickly. So, some of the tips to managing debt. A good golden rule is never borrow more than what you would make in the first year of your job because that's from what there are studies that shows that, all right, if this is the case, then you usually are able to pay back. Now, it's not a guarantee that you will, but usually it's a good case. And for example, if you think that you are, let's say, for example, I'll take my example. I'm an engineer. I'm an engineering major. So after graduation, if I think I can get a $70,000 or $80,000 loan, sorry, a job, I should usually not take that much amount of loan, maybe a little lower, maybe like 40, 50,000. And that's also not a good deal, but usually that's the golden. Now, most student loans have a 6-month grace period, which you don't have to pay the loan back. It starts after the 6 months. Now, that is a good time to look for a job and making income so that you can pay back the loan and get your adult life, so to speak, set up. Now, another good thing, always create a budget so that you know how much money you're spending on loans, how much money you need to survive, and how much money you have in excess. Because you can always pay off the loan quicker you want, and usually financial institutions or the government does not penalize you. Sometimes there is, but you have to look specifically if it does or not. And always prioritize to paying off your student loans first because it charges interest on you. And set up automatic payments. That's usually a good way to make sure that you don't forget about it. And it's usually good if you have a stable job to do that because, or else sometimes they charge you late fees, which we never want to have that. Now, secrets to success. It's not something that's a Pandora's box. It's very simple. And usually, if you follow this, you'll have a good chance to succeed. Learn how to borrow and spend wisely. Now, learning how to borrow is you have to look through some papers and stuff to see, hey, which one gives me the good deal? Like, should I get the subsidized loan or should I get the unsubsidized loan? Usually, subsidized is a good way to go. Like, should I take a private loan or should I take a loan that the government provides? Usually, the government is a good way. So that's how you need to learn which loans are better and also how to spend wisely. Like, make sure you don't spend your money on, let's say, classes that you might not necessarily need to graduate, because if you spend it on those classes, you might not have the money left for classes that you actually need. Be aware of your hidden fees. Sometimes it's the small, terms and conditions that it is annoying to read sometimes, but it's always good to be safe than sorry. Be smart cheap. When I say smart cheap, it means try to get as many benefits as you can by using your Shocker ID, because usually if you see a lot of places will give you student discount. So make sure if you're going out in these days, take your Shocker ID all the time. Now, usually there are campus events, but because of COVID, there aren't many in person, but that's always a good time to also, get some free food maybe, because who doesn't love free food? Set goals. Usually that means that, hey, I'm gonna do this work during this time. And if I don't, I'll try to do it. Like, it's not a hard deadline. Usually give yourself a soft deadline. That's always a good thing to do. And Shocker Think 30, that's like just a general golden rule that you should take 30 credits per year. So that ends up being 120 credits in 4 years. That's usually a bachelor's degree length. So 30 credits per year means 15 credits per semester. Usually 12 credits is considered as full time. But if you want to graduate in 4 years and you don't want to take the summer, then 15 credits per semester should be a good way to reach that goal. Now, how to contact us. So we are located right directly opposite to the RSC, so the Student Center, Attican Student Center. It's the Neff Hall, which is, we have this beautiful, that's the museum, anthropological. It's amazing. You guys should sometimes visit. It's pretty cool and chill. And it's usually empty, so you can look through all the artifacts and stuff super conveniently. And the room number is 115 Neff Hall. We're usually open Monday to Friday, 8 a.m. to 5 p.m. But because of winter and also because we have tax season, we changed it a little bit, and now it's 9 a.m. to 6 p.m. So, and we will always stay open late by appointment. Like if for some reason you have your schedule fully packed and there's no way you can do it between the time, just shoot us an email and we'll figure it out and we'll help you. And it's always free. We do not charge for any services that we have. A good way to reach us is the email. It's super simple. It's OSMM. So that stands for Office of Student Money Management. So OSMM at wichita.edu. If you have a Twitter handle, Instagram handle, it's WSU_OSMM. Usually a good way to reach us is by email. You can DM us on Instagram. We usually try to reply back as soon as possible. And yeah, that's pretty much it.
Thank you so much for that presentation, and thank you all for joining today. Our next You Should Know webinar will be hosted on income taxes. A special note, next Friday we are hosting a virtual magician. And you can find out more information about this at wichita.edu/SAC.
Now, if I
Thank
could
you.
say something real
Oh,
quick.
oh yeah, you
Oh,
can.
yeah. So I just wanted to let you guys know we have tax season coming up, and if you need help, please do not hesitate to contact us, and we will help you through your state and federal, and both for international and domestic students. We are always available to help you guys.